Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the risk metric. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Link for that is in the description below, where of course you can get access to this risk metric. Let's go ahead and jump in. So the risk metric for Bitcoin is something that we have been talking about since 2019. And it has been tested many times. But so far, price has never deviated outside of what the risk metric suggested was theoretically possible in the short term. So it was created, it was created over here. Shortly after creating it, we did have the pandemic drop where the risk went all the way down to about 0.13. So pretty low level on the risk metric. And in fact, that 0.13 risk level was the last blue, these were the last blue dots we saw, for the next several years. Okay. But you can see the general idea is that risk goes from 0 to 1. And the closer to 0 you are, historically lower risk, right? The closer to 1, historically high risk. Now, this again only looks at the price of Bitcoin. It does not concern itself with the on-chain data, does not concern ourselves with the social statistics. It doesn't concern itself with the macro side of things or anything like that, right? All it concerns itself with is the price, and also an understanding that there will likely be diminished volatility over time. Last cycle, I was of the opinion that Bitcoin would not go to 300K, right? And one of the reasons was because of diminishing returns, but also when we were up, in that 60K level, risk was in the 0.9 to 1 risk band, right? It was a pretty high risk level at the time. And so it was more prudent at the time to take profits, right? And last cycle, the first peak is where I took the majority of my profits. The second peak was a lot harder to navigate. And honestly, it took me a couple of extra months to sort of recognize that it would not go back up into the higher risk band. Again, you can see in 2013, we went to the higher risk bands a couple of times. But in all these other cycles, we basically just went into it one time, and then, and then that was it for the duration of that cycle. Now, after that, you can see that we came back down, risk went to low risk levels, and now it has been trending higher again. So the one thing I need to make clear is that my strategy is and has been, as I have said in every risk metric video that we've done on this channel since 2019, my strategy is to DCA into Bitcoin based on the risk levels. That is my strategy, nothing more, nothing less, right? Late in 2022, I was asked somewhat frequently, like, am I buying anything? And the only thing I would say is, well, I'm buying Bitcoin. And people said, well, why aren't you buying altcoins? Because, the altcoin market is going to explode to the upside. And my response was, well, Bitcoin's at a low risk level, so I'll buy that. But I also know that in pre-halving years, the Bitcoin dominance goes up, right? So I'll just stick with Bitcoin. Now, I will say that as we get into the halving year, I'm going to have to soften up my stance on the altcoin market. And I will say, if you want to hedge against the Bitcoin dominance not going higher or a recession not occurring, you're always free to take on whatever risk you want in the altcoin market, right? I would encourage you to figure out what sort of risk appetite you want to take on as we go into the halving year. You know what the risks are. If the risks don't materialize, you know what the reward is, okay? But for me, in pre-halving years, I focus on Bitcoin. And the reason I focus on it is because the Bitcoin dominance goes higher. And so far this year, that seems to have been the correct play. So late last year, I picked up some Bitcoin, okay? But now the risk level is in the mid 0.5 to 0.6, right? So 0.562. Now, for some people, right, depending on what your risk tolerance is, this might be an okay level for those people to DCA into Bitcoin, right? For other people, it might be too high risk, right? They might just say, you know what? They're happy to DCA below a certain risk level, but above a certain risk level, they're going to let other people take on that risk, okay? So I just want to explain one of the ways you can use this. This is the same chart, except you're taking the color code out of it and you're just plotting the risk on the secondary y-axis. You can see that it historically goes from 0 to 1, right? And last cycle, you can see it topped out in early 2021. In the pre-halving year, risk topped out right around 0.645 or so. I think it went a little higher than that if you include wicks, but if you're just looking at daily closes, right, it just has the daily close at like 13K. I think it did go slightly higher than that on a wick, so the risk would have gone slightly higher. I mean, I think I remember back then seeing it was like at 0.68 or something. But regardless, right now the risk is 0.554. And so what some people do is they pick a risk level and they say, all right, well, below that risk level, I'm going to DCA. Above that risk level, I won't. What I typically do is I pick a risk level. Let's say it's 0.5, it could be 0.4, 0.6, right? Whatever you want it to be. And below that, you can DCA. If it's, let's say you pick 0.5. If it's between 0.5 and 0.6, like for instance now, and it's above your risk tolerance, then you could just hold off on DCAing and then DCA if it goes back into the 0.4 to 0.5 risk level. It's sort of like earlier this year, like when it popped up into this risk level, into the 0.5 risk level, 0.5 to 0.6, you could have just held off, waited for it to come back down to 0.4 to 0.5, gotten a little more, it went back up, same thing again, right? And you can just repeat this process how you see fit. Now, some people don't like DCAing at 0.5 or between the 0.4 to 0.5 risk band. They would prefer to DCA only up to 0.4 risk or only up to 0.3 or only up to 0.2. Right? Some people might say they really want to see 0.1. But the point is there's not a right answer, right? It's what you want it to be. It's how much risk are you willing to take on? Not how much risk I'm willing to take on or how much risk your friend down the street or the random person that sort of makes fun of you for buying something, buying a cryptocurrency, right? It's not what their risk is. It's what is your risk tolerance? What are you willing to take on? And then you own that, right? You don't blame someone else if you buy and the price goes down. And if the price goes up, then great, right? You took on a risk and it either paid off or it didn't. With Bitcoin, a DCA strategy tends to pay off over a long enough period of time, right? You can go through periods where it doesn't, right? Like if you think about like 2022, 2018, 2014, if you're DCAing during those years, it pretty much sucks the entire year. Even in the back half of 2019 going through the pandemic drop, right? Like it wasn't really a fun time to DCA because the price was generally trending down. But eventually, we went back to looser monetary policy and Bitcoin went on an absolutely crazy bull run to almost $70,000. So the DCA strategy is how I navigate it. Now you can break it down beyond that. You can do something what I call dynamic DCA, which is where you put more in the lower the risk level, right? So like if the risk level hits 0 to 0.1, you're potentially doing some type of lump sum if you wanted to do like a dynamic DCA. If it's between 0.4 to 0.5 and you DCA up to a 0.5 risk level, it could mean that you're DCAing, but you're not putting nearly as much in as you would have, say, if it were between 0.2 to 0.3 risk. The reason you can do something like that, or the reason why I like to dynamic DCA, is because it allows you to weight your buys heavier at lower risk levels rather than to weight them all equally, okay? You can't do a dynamic DCA strategy if you don't have a cash position to draw from. If you have 0% cash and you're just throwing all your money in the market on every single paycheck, then, it could work out, right? I mean, like there's certainly periods where that would have worked out. That would have been a great strategy. There's other periods where having some cash on hand would have been great, right? I mean, like, think about the pandemic drop, right? Think about the drop in late 2015. There's other times where it would have been nice to have some cash on hand. So if you do the dynamic DCA strategy, you have to make sure you have cash on hand. Otherwise, how are you going to weight buys at lower risk levels a lot heavier than at the current risk level if you're just always throwing in all your money every single week into the market, right? You're not really hedging yourself against any other potential outcome. So I just sort of segue a little bit. One of the things I talk about a lot is I talk about downside risk a lot. Some people say I talk about it too much and I should talk about the upside potential more. And maybe that's true, right? Maybe that's true. But I think it's important as investors to always consider what the downside risk is, right? I think it's silly to go into an investment not thinking about what is the downside risk. Another thing, too, is if you buy something, you can still think it's going to go down, but buy it anyways because you're hedging against being wrong, right? Or you're hedging against it going down, but you not having the courage to buy it, even if it does go down. So again, you can have an opinion on the market. You could still DCA, or you could not. My strategy is to DCA below my own risk tolerance, okay? Again, right now, risk level is at 0.556. Going back to the color-coded, this is what it looks like. So, I mean, there's all sorts of potential outcomes here, right? I mean, last cycle, you can see it went up. It went from the dark blue to the yellow and then came back down into the pandemic drop. Here, it's gone from the dark blue. I don't think it's gone quite as low as it did last cycle. I mean, you can see over here, it went down to like 0.1 or so. It then had another drop down to about 0.13. It did get pretty low right here in June, but we know that the price went lower in November just by a small amount, from 17.5 down to 15.4. Risk was still within the 0.1 to 0.2 risk band. Okay, so again, the way you can navigate it, if you want, right, is you DCA below a certain risk level. If it goes above that, it doesn't mean you have to immediately sell, because, I mean, if you do that strategy, which I have done before, one of the issues with that strategy is like, one day risk will be, let's say your threshold's 0.5. So you're DCAing below 0.5. The next day it goes to 0.51. Then do you sell? Then what happens if the next day it goes back to 0.49, right? It's kind of silly to just sort of go back and forth every single day. So what often tends to be a better strategy, in my opinion, is to DCA up to a certain risk level. Above that risk level, up to another risk level, is sort of a gray region where you neither buy nor sell, right? And then above that level, that's where you might start to sell. And it could also be in a dynamic DCA way as well, where, like, let's say it goes up to the 0.6 to 0.7 risk level. That might mean you want to take some profits, but you don't want to sell everything because, well, what happens if it goes up to the 0.9 to 1 risk band? You can clearly see two examples where, doing, one potential solution was much better. In 2019, if you had decided to take profits between the 0.6 to 0.7 risk level, you would have basically sold the top, right? I actually sold some in mid 2019, but it wasn't because of this risk metric. At the time, I was using a different one. I don't even think I was talking about Bitcoin. I mean, I don't even know if I was making videos at this point, but I was using a different one at the time. But then we published this one later on in 2019. But one thing to consider is that, had you sold some in mid 2019, it would have worked out really well, right? I mean, like, price collapsed like 70% after that before then going back up again. But had you sold everything at the 0.6 to 0.7 risk band in late 2020, you would have sold just before another 3x move, right? So the way that I navigate that dilemma, because there's no way we can possibly know the future, right? Like, we can't know possibly if it's going to look more like this or something in between, right? We don't know. The way that you can navigate it, or the way that I do, is if it gets up to a high enough risk level, you could take some profits, but that doesn't necessarily mean you have to sell everything, right? That way, if there is a substantial pullback, hey, you took some profits. Congratulations, right? Like, you didn't let the 2019 bull run go to waste just to watch price drop 70%. But you also wouldn't want to necessarily sell everything just in case you're wrong. So that's the way I use the risk metric, right? It's basically like, at low risk levels, I DCA in. At high risk levels, I DCA out. We talk about the macroverse on here. We talk about Bitcoin dominance. We talk about all sorts of things. But when it comes to buying Bitcoin, all I do is, if it's below a certain risk level, I buy. If it's above it, up to another risk level, I don't do anything. And then above an even higher risk level, that's where I start to sell. There's not a right answer, right? I think everyone wants to know, what's the right answer? Like, where do you buy, where do you sell? There's not a right answer. What's right for you is probably not what's right for me. What's right for me is not going to be what's right for someone else. What someone in their early 20s might want to do is going to be different than what someone in their mid 60s would want to do, right? So it all depends on what your own risk tolerance is. Now, I just want to say again, my focus in the pre-halving year is Bitcoin. And I'm not going to apologize for that. I think a lot of people think that I should talk more about the altcoin market in pre-halving years. And I can understand why some people might say that, and I can kind of empathize with it. But I go back to historical outcomes with altcoins with respect to Bitcoin, and you have two potential outcomes, right? Bitcoin goes parabolic, the Bitcoin dominance goes higher, right? Having Bitcoin is a good thing. Bitcoin crashes, alts get wrecked more than Bitcoin, right? So that's kind of has been my strategy. Now I will say, going into the halving year, I'm going to have to soften up my stance on the altcoin market. That doesn't mean that they're going to be done bleeding back to Bitcoin. They might not be. It could take several more months. But with that said, I don't think it I don't think it makes sense to completely ignore that side of the market forever. It's just that, as I said 2 years ago, that altcoins collectively will bleed back to Bitcoin, for the next 2 to 2.5 years, right? That's what we said back then. It's now been about 2 years. It could go on for another 6 months or so. But we'll have to see. So in the halving year, we'll see where normally it's somewhere in the halving year where altcoins start to durably outperform Bitcoin. But in the pre-halving year, Bitcoin tends to reign supreme. Okay, and I don't really think that this pre-halving year has been any different. I mean, we've seen dominance of Bitcoin go up for the entire year. Okay, so remember, the reason we talk about Bitcoin dominance is to understand your risk-adjusted returns, right? Some people look at it and they just stay 100% cash no matter what, right? But again, the reason why you talk about Bitcoin dominance is because it tells you, if you believe in the theory of dominance, right, it tells you where you want your capital allocated if you're putting it in the cryptoverse. That doesn't mean you should put all your money in the cryptoverse. It just means if you're putting your money into the cryptoverse and you think the dominance is going to go higher, then Bitcoin is where you would want to allocate most of that capital. But on the other hand, if we get to the point, or if you get to the point where you're looking at the Bitcoin dominance chart and you think that it's topped out, then the altcoin market starts to become worth the risk relative to Bitcoin. That doesn't mean that alts can't go down. I mean, if Bitcoin crashes on its USD pair, it'll take altcoins with it. It's just that you'll reach a point eventually where whatever altcoins are going to survive will have bottomed out against Bitcoin, and then they'll just sort of move more or less in tandem with Bitcoin rather than just constantly bleeding back to it. Okay, so that's sort of the point that I want to make. But again, going back to the risk stuff, between 0 to 0.1 is where this risk metric oscillates between. Right now, it's sort of in the middle between 0.5 to 0.6 risk. Going back to the color-coded risk, you can see where it currently is, right? I mean, it's gone from dark blue to yellow this year, kind of similar, in fact, to 2019, right? And there's no guarantee that we're going to get anything like this cycle, but there's always a chance that something like that unfolds as we get closer to the halving, or maybe even sometime around then, or even after it. I don't know. And it's, in my opinion, it's worthwhile to be prepared for as many outcomes as you can be by being hedged, right? By being hedged. It's like saying, if you think that something's going to happen, it doesn't mean that, it has to play out in that specific way. One of the things I said coming into this year was that Bitcoin, I thought Bitcoin would go as high as 35K. I was wrong, right? Like, I was wrong. And, every single day, I mean, I feel like I get blasted by people saying, well, like, when are you going to admit you were wrong about that? It's like, well, I've admitted it 10 times on YouTube and on Twitter, and I don't know how many more times I can say it, right? I thought that 35K would be the high this year, and we went above it, right? So my view on that was wrong, okay? It just simply was. But because I thought that it could go up in 2023, right? That's why I kept my crypto portfolio Bitcoin heavy, right? That's why I kept it Bitcoin heavy and not altcoin heavy, because I thought Bitcoin would outperform the altcoin market. Just trying to be honest, right? And there have been some altcoins that have done great this year. And, I knew going into this year that would happen, right? Like I knew that there would be some that would absolutely outperform Bitcoin, and that, you know, sort of these views would sort of be blasted as well. But that was always the point, right? There was always going to be some altcoins that were going to outperform Bitcoin. There always are, and there probably always will be on shorter time frames in pre-halving years. It's just collectively, Bitcoin tends to outperform the altcoin market as a whole, even though you can find individual altcoins that outperform. Okay, so again, you know, if you want to hedge, right? If you want to hedge against dominance topping out, which I don't really think dominance has topped out, is my base view. But if you want to hedge against that, right? I mean, you could have altcoins in your portfolio, and again, the closer you get to, you know, to QE and all that stuff, I mean, you know, it would make more and more sense. But who knows? Who knows what's going to happen between now and then? So that's a decision that you have to make. Again, I am going to soften up my stance on the altcoin market as we get into the halving year, as we get into 2024. But I would say that dominance has more or less gone the way we thought it would this year. Bitcoin USD has sort of gone above my expectations this year, because it's, you know, right now it's sitting at around $37,000, and my high end target was $35,000. So it's exceeded my expectations, which, you know, just goes to show you why ignoring everything, coming up with a strategy based on a risk metric is useful, right? And look, guys, I mean, if you like, the Into the Cryptoverse premium stuff is my website, but you know, you don't have to get a subscription to that. I mean, you can make up any type of risk metric you want. There's all sorts of risk metrics that you could create, you know, with Bitcoin, right? So, you know, I don't want to make you think that like this is the only possible solution. Like, there's so many different things you can look at. For Bitcoin, you could look at extensions from certain key levels that you're following. You could look at some of the logarithmic regression stuff, right? Which there's plenty of that published on the internet. You can look at all sorts of things for Bitcoin and how you would want to navigate that. This is just what I use, right? This is just what I use. But you're free to use whatever you want, right? Obviously, you're free to use whatever you want. I just want to sort of explain what I use. And what's interesting is if you only look at sort of the high ends, right? Like this is the 0.8 to 0.9 wristband, right? You can see where those occur. If you look at the 0 to 0.1 wristband, you can see that we've hit it over here, right? I mean, if you sort of combine them into 0 to 0.2, you can see that we've hit it a few times, right? Over here, right here, right here. Here, again here in the pandemic drop, and then a little bit over here in late 2022, right? So those are the times that we've hit it. Last cycle, we didn't even hit the 0 to 0.1 wristband. We came pretty close. We hit like 0.1 or like 0.105 risk or something like that. We came pretty, and probably on a wick, we actually did go below 0.1, but by the daily close, it was around 0.1. But again, if you just sort of look at the lows and the highs, that's what it looks like. You can see that, like, you know, this cycle we had a lot of blue, right? A lot of blue, and it lasted from like September until July. I mean, until June. It was basically almost a year of being in the lower wristbands. Last cycle, it was very short, and then we had a macro higher low in 2020. Here, it was maybe even shorter. I mean, like we had a few blue dots in here, but they were also sort of sporadic, right? They weren't all together like they had been over here, right? Over here, they were more or less all together. And even in this case, we eventually did come back down and really test people's resolve before going back into a phase of expansion into new highs. So that's where we currently are. Maybe we'll also add on the 0.5 to 0.6, right? So that's where we are. Like, you know, if you add on the 0.5 to 0.6 wristband, so you can kind of see like where we are now. Here it is last cycle. Like last cycle, we went up to around these risk levels, sort of faded for a bit, but then eventually got back into these risk levels by the end of the halving year. The cycle before that, you can see we never really went back down to those lower risk levels, right? You know, crypto can be super stressful, right? Super stressful because you're always wondering what way the price is going to go. I think the best strategy is to just have a plan and stick to it no matter what. So like, it's not what way is the price going to go. It's if price goes up too quickly to a high enough risk level, then I might take profits. If price goes down to a low enough risk level, then I'll buy. And if price just stays, where it is right now, then I might just sit on my hands and wait for it to make that move. Anyways, we'll wrap it up there. Hopefully you guys enjoy the content. Make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.